This video covers AEON's second quarter financial results for FY2025 for the period from March to August 2025. AEON is one of Japan's largest retail companies operating supermarkets, shopping malls, convenience stores, and financial services across Japan and Asia. AEON is known for its AEON stores, MaxValu supermarkets, Ministop convenience stores, and AEON Mall shopping centers. It also has a strong presence in countries like China, Vietnam, and Malaysia. Consolidated results for first half of fiscal year 2025. AEON achieved record highs for both operating revenue and operating profit. Revenue rose 3.8% year-on-year to over 5 trillion yen, setting a new record for the fifth consecutive fiscal period. Operating profit increased 19.8% and net profit increased 9.1% to 4 billion yen. Net profit turned positive from the previous quarter, recovering from a net loss. The strong results were driven by expansion of the private brand TOPVALUE, demand for summer heat relief products, and higher labor productivity through digital transformation. The progress rate against the annual net profit is only 10.1%, but AEON plans to improve in the second half and achieve the target. AEON strengthened its private brand TOPVALUE, especially the low-priced Best Price series, to support customers under rising prices. Group sales grew 11.7% year-on-year, improving profit margins through trusted quality and competitive pricing. Due to the continued depreciation of the yen, imported goods have become more expensive in Japan, and affordable private brand products from AEON have been growing in popularity. In the first half, all segments recorded higher revenue. Profit rose sharply due to recovery in general merchandising stores and double-digit profit growth in supermarket, health and wellness, shopping center development, and specialty store businesses. General merchandise store business operates large-scale stores that offer a wide range of products, including groceries, clothing, and daily necessities in one place. Losses were reduced significantly due to store digital transformation and cost reforms. AEON Retail, AEON Kyushu, and Kando 100 yen stores contributed to profitability improvement. Non-food areas were strengthened, and labor productivity rose. Supermarket business, which mainly operates stores selling food and daily necessities. Brands like MaxValu and My Basket convenience stores fall under this segment. Operating profit rose 28%. Growth came from expanded top-value product sales, better pricing of key value items, cost reforms, and improved productivity. My Basket stores increased to 1,262 locations. Compared to convenience stores like 7-Eleven, Family Mart, and Lawson, My Basket offers significantly lower prices despite rising inflation and gaining support from urban customers. Discount store business offers products at lower prices by focusing on cost efficiency and limited product variety. This business targets price-conscious customers looking for value shopping. Sales rose, supported by private brands and low prices, but profit fell due to temporary cost increases for growth investment. Focus remains on improving store efficiency and price competitiveness. The health and wellness business covers health, beauty, and personal care products and services. It includes Welcia Holdings, which operates one of Japan's leading drugstore chains. In recent years, Welcia has emphasized growth of its private brand products and efforts to improve operational efficiency, contributing to stronger performance in many periods. Sales of OTC drugs, cosmetics, and food items have also shown growth in several reporting periods. Financial Services handles AEON's financial operations, including credit cards, installment payments, and digital payment services such as AEON Pay. It serves individuals and businesses across Japan and Asia, using AI to enhance credit assessment and collections, supporting the group's financial base. Transaction volumes and receivables grew, especially in Japan and Mekong regions. Operating profits slightly decreased due to higher costs in Malaysia. AEON Pay users increased to 9.48 million, and digital tools improved credit and collection management. Shopping center development business operates and manages AEON malls in Japan and overseas. It focuses on developing large shopping centers that combine retail, entertainment, and community functions. AEON Mall achieved record high revenue and profit. Japan saw stronger revenue from mall refurbishments and rising duty-free sales. Overseas malls in China and ASEAN performed well with solid sales and rent income. Services and specialty stores business offers a wide range of specialized services and products, including facility management, entertainment, apparel, and amusement. AEON Delight manages buildings and energy efficiency. AEON Entertainment operates cinemas, and AEON Fantasy runs indoor play facilities. Segment profit rose 16%. AEON Delight increased profit through facility management contracts. AEON Entertainment saw gains from popular films, while AEON Fantasy benefited from strong indoor play demand during the summer. International business covers AEON's retail operations outside Japan, mainly in countries such as Malaysia, Vietnam, and China. While markets like Vietnam and Malaysia are expanding steadily, China remains challenging due to weak consumption. AEON Malaysia and Vietnam grew in both sales and profit, while China saw profit gains in Hubei region despite weak consumption. Revenue in ASEAN remains strong, though some regions faced higher costs. Fiscal year 2025 forecast. In the first half of FY2025, AEON achieved record-high operating revenue and profit, continuing the strong momentum from the first quarter. In the second half, AEON plans to further accelerate price strategies centered on private brands, enhance productivity through digital transformation, and advance cost structure reforms to reach its full-year targets. Although the impact of making AEON Mall and AEON Delight wholly owned subsidiaries and Tsuruha Holdings a consolidated subsidiary is anticipated, it has not been factored into the current forecasts. AEON expects all full-year operating revenue, operating profit, and net profit increase year-on-year. A 3-for-1 stock split was conducted on September 1, 2025. AEON plans an interim dividend of 20 yen and a year-end dividend of 7 yen, equivalent to 41 yen on a pre-split basis, 1 yen higher than the previous year. AEON has been steadily increasing its dividends. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 1,878 yen as of October 14, and the US dollar stock price is $12.46 as of October 14. The stock price had been declining in the short term, but after this financial announcement, it rose by more than 5%. The current PBR is 5.32, and the PER is 130, with a dividend yield of 0.73%. Compared to the past few years, the PBR and PER indicate that the current stock price is relatively high. PER has climbed to 130, so it does feel a bit overvalued now. Conclusion: AEON delivered strong results in the first half of FY 2025, achieving record-high revenue and profit, driven by private brand growth, cost reforms, and improved productivity across all business segments. Despite short-term cost pressures, AEON continues to strengthen its foundation through digital transformation, regional restructuring, and strategic investments. AEON remains on a steady growth path, with earnings improving again this year.